Good morning, bosses. How are you doing? Once again, I'm going to answer some of the questions that I received in my social media or in my WhatsApp from my clients or prospective clients. These questions are basically about investing abroad, investing in Miami, investing in Dubai, economics and things like that, things that I help my clients with. I have 5 questions that I want to address today, and I'm going to do it starting now. Question number 1, how the purchase of a property in Miami can help me protect my assets against economical instability in Brazil. While this question is directed to Brazilians, I have seen more and more people from UK and France specifically, and also Italy having the same issues. And it's not only economical instability. Unfortunately, UK and France, Italy, not so much as of right now, but Italy and UK and France, they are suffering a lot with high taxes and crime. Something that for me as a Brazilian is very weird to listen to, because when I was little, as most of the South Americans, for us, Europe is this heaven that we always admire and we always look forward to visit or even to move to, because Brazil was violent, Brazil was unstable, Brazil has taxes. And now we see those countries that were once for us as benchmarks or North Star that we would like to pursue, having those kinds of problems. So people from those countries that are suffering instability, even for Americans that are wanting to diversify, should invest in other countries to take away those risks. If your risk is all concentrated in one country, I tell this to my clients in Brazil all of the time. What's the point of having 15 properties, 100 properties in Brazil? There is no point for that. You are concentrated 100% your risk in just one country. If the country goes bad, the whole sector, oh, but I also invest in stocks, I also invest in bonds. It doesn't matter. It doesn't matter, because you are, in the end, investing in Brazil. If you're buying properties in Brazil, if you're buying stocks in Brazil, if you buy bonds in Brazil, and you can change Brazil for any country. You can buy stocks, properties, and bonds in Colombia. You can buy stocks, properties, and bonds in UK, in France, in Italy, in Portugal. You are not diversifying your investment. You are not diversifying your assets. And if you build a great asset for yourself, for your family, you need to protect it. And you're not going to be 100% protected if you invest everything in one country. So investing in different countries allow you that this country that you're trying to run away from is not going to seize your assets, is not going to overtax your assets like they are doing in California now. If you own a property worth more than $5 million, you get an extra tax on top of the property tax and the income tax you already have. So it makes no sense. So if you're buying your second, third, fourth, fifth, 10th property, it doesn't make any sense to stay in the same country. Diversify. You're going to diversify the political risk. You're going to diversify the economical risk. You're going to diversify the currency. If you are wealthy, probably your expenses are not only in one currency. If you are Brazilian, a lot of your expenses are attached to the dollar. You buy imported cars, you buy imported clothes, you travel abroad, so why having all your income in Brazil? It doesn't make any sense. If you are American, you are traveling to Europe, they work in euro. If you are in UK, your life is in pound, but you're spending money in dollars, you're spending money in euros, you're spending money in dirhams. So make sense for you to diversify and reduce that kind of a risk. Question number 2, which are the main fiscal benefits of investing in property in Miami, especially to those looking for international diversification? That's a very good question. And despite the fact, Maya is here licking her paws. Despite the fact that in the US you have property tax and you have income tax, there's a lot of legal tricks that you can do to pay less taxes or defer the taxes that you pay. For instance, you can do the 1031 exchange. The 1031 exchange means that once you sell a property, you can buy another property, invest in another property, and don't pay income tax on that property. So if you are in a phase, like I have a lot of investors in that phase where they are building their asset, right? They build a very nice career for them. They have the money in their country, and now they are starting to invest, or they want to multiply their assets, and they are in a phase that they can take a little bit more risk. So that's what they're doing. They are buying a property, renovating, or buying a land and building. And once they sell those properties, they buy another one to do the same thing. So if you're doing that in construction, it's a little bit more tricky to do the 1031 exchange, because once you sell the property, you need to invest all that money in another one. And if you are building, you're going to buy the land and materials to build a house, so you cannot do that. So the way that we do for our clients is, once the property is done, we rent that property and finance that property at the end. So with the money of the finance, he does the next one, and so on and so forth. So that's one way. The 1031 exchange, it's another way. The accelerated depreciation in some assets, you can do that, where you take everything that is non-real estate related, pipes, ACs, anything that you have inside the building, you can depreciate more, so you have more expenses in the first and the second year, so you can have a less taxable amount. So there's a lot of ways that you can benefit from that in other countries it might not be allowed, it might not be easy. Now, if you invest here in Dubai, you don't need to worry with anything of that, because Dubai, we don't have capital gains, we don't have income tax on the rent, and we also don't have property tax, so it makes even easier. But if Dubai is too exotic for you, still, you can go to Miami and do the same thing. Number 3, why Miami continues to be a popular choice for international investors, even in times of uncertainty, economical uncertainty, because it's the US. And the US is very resilient. Every time the US goes into a problem, recession, or anything else, number one, people buy dollars, so that appreciates the currency. So if you are a Brazilian and you invested in Miami, number one, that property is worth in dollars. So if the dollars is going up, you're going to be safe. Number 2, Miami at this moment is where everybody in the American continent is flying to, right? New Yorkers are buying in Miami, Californians are buying in Miami, Colombians, Brazilians, Argentinians a lot, because it's still a very good destination for that part of the world, and there is a lot of wealth in that part of the world. And let's be honest, from Sao Paulo to Miami is just an 8-hour flight. From New York to Miami is just a 3-hour flight. From Colombia to Miami is just a 3-hour flight. So it's an easy access. It's a very cosmopolitan city. It's a very diversified city, diverse city. So there's a lot of aspect that people see in Miami and say, okay, I need to invest there, because people are going there. Citadel just announced a new building in Brickell that's massive. And Citadel is one of the biggest funds in the world. They were in Chicago and they moved to Miami. So if those big players, Citadel, Microsoft, Tesla, all those big companies, they are looking into Miami as a safe place to invest, why wouldn't you? Question number 4, what's the best strategy to get passive income in dollars investing in off-plan or pre-construction in Miami? So the best strategy to have passive income in off-plan or pre-construction properties in Miami is you can do short-term rental. There's many buildings now in Miami betting on that. Before COVID, all the buildings had restrictions. Now they are being built with that purpose, to have short-term rentals. Now, if you don't want to pay someone to do it, it's not very much passive, because you need to do work. So you can hire a company to do that for you, a management company to do that for you, or instead of that, you just rent long-term. Long-term rent is still a good return. We're talking about 5 to 6%, and short-term, you're going to be between 8 and 10. Daniel, but that's too low, but that's passive. Passive, you work once and collect forever. You want to get your hands dirty. You buy a multifamily, you gut renovate the multifamily, you bump up the rent and refinance and go to the other one. That is how you get a lot of money, but that's not passive. So if you are in another country, if you are doing other things that you cannot pay attention to it, don't go for it. The next example is not off-plan property, is triple net lease property. You buy a property, you have a rent for 30 years with a big corporation, Walmart, Target. Chase, Wendy's, all those big corporations, you collect the rent for 30 years and you have to do absolutely nothing, because being triple net, they will take care of the property tax, they will take care of the maintenance, and they will take care of the insurance. So you have to do absolutely nothing and you're going to get between 4 and 6% return, which is pretty good. Last question, how can I guarantee the safety of my investment in Miami considering the fluctuations of the market? Number one, hire a good real estate consultant. And I'm not talking about real estate agent or broker. I'm talking about a consultant. Something that's going to tell you the truth that is good for you. Not something that is trying to sell you. I always tell people that come to me, I am not trying to sell you anything. I'm here to listen what you want and deliver the best option for you. There's a lot of projects in Miami. Some of them are great investments. You're going to make a lot of money. Some of them, you're not going to make money, but you're not looking to make money because you just want a very nice place to live. We got those too. So understanding what you want is the step 0. What do I want? Number 2, select someone that can give you those answers. Not that they're going to say whatever you want to hear, but that they're going to give you the right answer. And number 2 is number 3, is picking the right project for you. Not all the real estate are the same. Some investors, like the other day, an investor called me Friday. He wanted to invest in short term. He wanted to make 1 or 1.5% per month. I said, that's not going to happen. And then he said, what about if I invest off plan in Dubai? I said, you're going to make a lot of money, but that's not your profile. You were a developer in Brazil. If you're buying off plan in Dubai, it's going to take you 4 years, right? And in 4 years, you're going to put your money, you're going to have a very good return. If you put on the right project, you can double your money. That's not an issue. However, that's not your profile, I told him. In 4 years, you can do 4 houses in Miami. You buy one, you build one, you sell, you do another one, you do another one, you do another one. With 20% return per year, you're going to make the same 100% or more. So it's about understanding the client and it's about understanding what they want to offer the right thing. So those are the 5 questions for today. I hope you like it, and I'll see you back with a regular scheduled vlog tomorrow.